Well, it was a strong day on Wall Street where we saw the S&P 500 up over 1%, and we're back to a bullish posture using the intermediate term line on the market forecast tool. So that's a promising sign. Some of today's positive activity was a result of a tweet from President Trump saying that he had a long dialogue with the president of China, and the hopes there is that we can get this trade skirmish all resolved at some point. But on the downside, we saw Apple come out with earnings after the bell here tonight, and those shares are trading lower. We also have the Russell 2000 as a laggard that remains with a bearish posture at this point. So with all that out of the way, I thought we'd look at a trade application that's outside of the United States borders in one of the hottest areas of the globe. So let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 1st, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience. Remember, you can go to YouTube, subscribe to our YouTube channel, and while you're there, click on the description area. We have a link that you can sign up for our email distribution list that'll entitle you to what stocks are giving you overbought and oversold cluster signals within the S&P 500. We're also heavy users of Twitter, so make sure you're following us. First of all, my handle is @BrandonVanZee, and then anytime you see any of the tweets related to the Market Outlook video, we'd encourage you to click like and retweet just to give us a heads up that you appreciate the effort that goes into creating them on a daily basis. Lastly, we also have a presence on Facebook. Feel free to check out the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into our analysis for the day. As you can see here, I've got chart 4B pulled up. So for those of you that are Premium Market Scholars subscribers, you're welcome to follow along with me in my presentation today with the charting package we offer you guys when you sign up. This charting package right here, this particular chart setup, I should say, 4B, is just simply a foregrid that allows you to see the four major U.S. equity indices all in one view. And each one of the charts is 3 months in length. And every one of the candles you see is a daily candle. Now, when you look at the background colors of the charts, they are set up to automatically tell you when we have a bullish posture versus a bearish posture using the intermediate term line on the market forecast indicator, which can be found on the Thinkorswim platform. So as we kind of go around and take a look at what the results were here today, you can see the S&P 500 was up 1.06%. That's a strong day. It was strong enough, in fact, that this is our third day in a row to the upside. And you can see that we now have this light green background color here that's kind of shaded behind our candle. And that reminds us that that was enough of a move today to move our posture from bearish to bullish. Notice down below here, the green line, which is that intermediate line I mentioned before on the market forecast indicator, now emerged out of that lower reversal zone. Now, we've got to be a little bit careful there because we had that same condition exist at one point in October as well, and we all know how that turned out. It ended up failing, and we saw lower lows after the fact. So we don't want to get too aggressive here, and that's why you'll see that the color background is that light green color as opposed to this darker green color that you saw back here when we were much more bullish. So at this point, we have what's known as a weakly bullish posture, not a strongly bullish posture. So you just got to be a little bit more careful, maybe have smaller position sizes if you are going to dabble on the long side of the market until we see some more of these trends kind of established for a longer period of time. Same thing kind of happened over here on the Dow Jones. We now have that weekly bullish posture as with that green line emerged out of the lower reversal zone there. The Dow was up exactly the same as the S&P 500 today. That doesn't happen very often, but it was 1.06% to the upside. The NASDAQ had an even more robust 1.75% move to the upside. And similar to the S&P 500, that was enough of a move higher where we now have a weekly bullish posture on the NASDAQ as well. But our laggard remains the Russell 2000. Now remember, the Russell 2000 oftentimes moves a lot more erratically on both the upside and the downside. So it was nice to see it up 2.2% today, which would have been the leader amongst the four indices, but it still wasn't enough to reverse that strongly bearish posture. You'll notice that we still have this dark pink shading right here, and the reason for that is that green line remains in the low reversal zone. If we can have another big day tomorrow, then there's a decent chance that even the Russell 2000 could join the other three indices with some bullish posture. Also, keep in mind this is now the more bullish time of the year. I know not everybody invests in that way or in those terms, but it is true that if you go back through history and look at the various 3-month periods of the calendar year in terms of stock market performance, November, December, January is oftentimes viewed as the strongest 3-month period within the market. So a lot of us are happy to put October behind us, and hopefully there's more good things in store for the bulls going forward. Of course, we do have midterm elections coming up, and you never know what might happen as a result of that. But as of right now, at least we're starting to see some early signs of bounce out of the markets, and we're at a more bullish time of the year from a calendar perspective as well. Let's take a peek here at our next chart setup. On this one, we're going to go over here to chart 4C for those of you following along at home. And this is our 3 green arrows set up here, and these are all daily candles, 3-month time period as well, same 4 charts. But the difference in the background color will tell you whether we've got 3 green arrows, 3 red arrows, or a mix of green and red arrows. So if we have white background like we do in all 4 of our cases right now, right there, and right there, and right there, and right there, that means that we have a mix of green and red arrows. So as an example, up here on the S&P 500, we do have 1 red arrow in the terms of the price's relationship to the moving average itself. If we've crossed below the moving average, you generate a red arrow there. So that's our problem child from an indicator perspective right now. But the good news is on the other 2 indicators, the MACD, which shows us momentum, has just turned green here. And so that's a positive result of what's happened for the last 3 days in the market here. And then likewise, the stochastics, which oftentimes tells us whether the bulls or the bears are in control, now flashed a green arrow there as well. So we've got 2 out of 3 of the arrows being green in all of these charts right now. Really, it's the same kind of setup where we've got the red arrows are on the moving averages, and then the MACD and the stochastics on all 4 of the charts currently are green. So we're making progress. You know, it's not perfect. We just had a lot of damage done on the charts here in October, so it won't happen immediately, but we are making progress, and that's important. Let's go ahead and take a look here at our next chart. This will be our 1040 crossover method. This is chart 4D. Now the difference on these charts here is this is a longer term time period. So we're going back 3 years on each of these charts. Every one of the candles that you see is 1 week in length rather than 1 day. And this is our 1040 crossover method, and you can see up here on each of the charts, the labels kind of will tell you the story there. The orange line on the chart represents the 10-week moving average. The blue line on the chart represents the 40-week moving average. And we're simply looking for crossovers of the moving averages themselves. And we do have something to report as of this moment in time. Now remember, this candle is not done yet, and what I'm referring to is down below here in the Russell 2000. This candle's not formed yet officially because it's not Friday. Because these are weekly candle charts, we still have 1 more day to throw a Hail Mary of sorts. But as of this moment in time, it is looking highly likely that we do have a bearish crossover on the Russell 2000. You can see that orange line coming down and touching just a little bit below that blue line right there. The other charts are okay. Notice that the Dow Jones retained its strength. We're still okay on the S&P 500, a little bit of daylight there, and also on the Nasdaq. So it's really the Russell 2000 that will be our problem child. And so what that's telling us is that from a longer term trend perspective, we would now have more of a bearish tilt. Now, a lot of times people use this particular chart setup for money that they cannot actively trade. So as an example, somebody might be sitting in their 401k and they've got a bunch of different offerings from their 401k provider with index funds. And if one of those index funds is small cap stocks, that would be very similar to what this Russell 2000 is telling us here, that we do have stress in the small cap world, but you would retain your bullishness in the larger cap areas, including the Dow Jones and the S&P 500, and even the more technology or growth-oriented names here with the Nasdaq as of this time. You know, if the midterm elections come out and chaos ensues and stocks start selling off in a big way for whatever reason, then of course we'll have to take another look at it. But as of this moment in time, it does look like it's the Russell 2000 that is the one that is going to be setting us up with a bearish cross as of tomorrow night. So starting next week, we'll likely start seeing a pink shading on the chart when that officially takes place as well, just on that Russell 2000. Let's go ahead and take a look at another chart setup now. Let's go over to chart 4E. And as a reminder, on these 12 grids, the background color will determine whether we have a bullish or bearish posture using that intermediate term line on the market forecast. So if it's pink background, it means we have a bearish posture on that particular security. If it's a green background, it means we have a bullish posture. So one of the big stories that people have been talking about recently has been volatility. As you can see, the VIX did come down pretty significantly here today. It was down about 9%, and that makes sense. Makes sense. Obviously the stock market was strong today for the third straight day, so it's not a big surprise to see the VIX fall for its third straight day. But you will notice that while the background color of the chart is pink, notice that we're still trading above a rising moving average. So it's entirely possible, especially knowing what we know with Apple at this moment in time. And remember, when I go through some of these earnings reports during the market outlook video, we have no idea whether those gains or losses will hold until the next morning. It just gives us an early indication. But as of right now, let me just come on over here to the trade tab to show you. Apple is the big kahuna in the marketplace. Remember, it's the most important company for most folks in the marketplace because it's the largest. It's the world's only $1 trillion publicly traded company. And so Apple closed today's session at 222, and it's now trading at about 212. So it's down $10 per share. It's not a massive give back considering the share price is a fairly high one, so $10 doesn't maybe sound isn't as bad as it sounds. But obviously, if you want to be bullish the markets, you want Apple in your corner. It's really hard for the overall market to go up if Apple isn't also participating on the upside. So that might take a little bit of the heat that we've had on the portfolios here in the last 3 days and kind of throw some cold water on it to a degree. But again, we'll see. Maybe tomorrow morning we'll get a bunch of upgrades out of Apple, or some fund managers will decide that they want to announce that they're buying the shares, and who knows, maybe we get some sort of a reversal. Sometimes we see that with conference calls as well. The company will report one earnings number, but by the time the management team gets on the conference call, they start saying some more promising things about the future, and then share price can reverse there as well. But right now, unfortunately for bulls, Apple is down about $10 per share. So if that starts to kind of set off a chain of events that leads to more of a risk-off mentality again, like we saw for much of October, then I would anticipate that the VIX would probably perk up a little bit tomorrow as well. But remember, for those of you that have been selling premium, let's say 4 or 5 days ago, you probably love the fact that the VIX has kind of torpedoed here recently because it's helping your time decay in your trades. Let's go ahead and take a look here at, actually it's the volatility, I'm sorry about that, not time decay, but that helps as well. Let's take a look at a couple of these other charts that are actually showing up in green here. Notice that the foreign bonds has a bullish posture right now, and that's a little bit peculiar because the other bonds that we have on the board, if you're looking at the 10-year treasury, actually the U.S. government bonds is right here. We've got junk bonds over here. And then a lot of times people will look at preferred stocks, MLPs, and REITs as being kind of bond light because they are yield-based plays. So it is a little bit interesting to me to see foreign bonds actually bucking the trend of the others and kind of retaining a little bit of strength there. Notice that the U.S. dollar fell. That helps support foreign assets. Remember, foreign assets generally do better if the U.S. dollar is weak, and we did see a pretty big give back in the U.S. dollar today. It was down 0.66%, and so we'll actually talk about that here in just a little bit when we get into our trade application, but you can see that that benefited foreign bonds on a relative basis versus U.S.-based bonds. Notice that we've got down here, we've got ag commodities getting a nice little bounce. We actually saw a really nice bounce out of gold as well. Both of those were up over 1% today, and I'd have to believe that's a large reason behind that would have been what's going on with UUP falling. A lot of times when the U.S. dollar falls, commodities that are priced in the U.S. dollars are going up, and that's what we're finding today, with the exception of crude oil. And that's been kind of a theme. You know, we've mentioned that many times, that crude oil is almost kind of marching to its own drum right now. And unfortunately for the bulls of crude oil, it's not necessarily a promising tune that they're singing. You can see right here that we do have what's known as an oversold cluster signal. So perhaps we're getting towards the end of this downdraft here, but do keep in mind that commodities are much more volatile in many cases than, let's say, mega cap stocks. And therefore, we do find some more of these extreme overbought and oversold cluster signals existing, and therefore each one that does exist doesn't necessarily give us the snapback that we might assume if we're using the cluster signals on other products out there. But what you'll want to know is that crude oil is now touching 3-month lows. Remember, it was in a pretty nice uptrend before October. And then I think investors or traders realized that crude oil was kind of the poster child of risk. And once investors and traders started to seek non-risky assets, they started to sell crude oil and go into other places like gold, which has held up a little bit better, and consumer staples and different things like that. And so right now, that's not a promising sign. You'd like to see crude oil prices remain strong if you think that the appetite for risk is going to be strong out there. So that's maybe a little bit of a fly in the ointment today, and an otherwise pretty bullish day for markets. If we take a look here now at our next setup, this will be chart 4F. This will be our foreign charts, our foreign stock market charts. And you can see Brazil continues to be very robust in the upper left. We have Russia joining the party with a bullish posture. We also have China. You know, that tweet that I mentioned in the intro not only affected U.S. stocks positively, but even more so Chinese stocks. You know, one thing that the market seems to have told us since all of this news about tariffs has been hitting is that from an economic perspective, it will likely hurt China more than it will hurt the United States. Not to say that both nations can't be hurt overall, but China would likely be hurt a little bit more. And so when we have this tweet come out today, you know, there's probably a little bit of this 4% move to the upside as a result of that. You know, just the hope that perhaps the United States and China can get together, come to an agreement, and get back to trading like they were to a degree in the past. That's also being aided by the dropping or the falling US dollar there as well. But China was actually the biggest mover to the I take that back. I look just down here now. There was actually one bigger mover, and that was South Africa. And that might be partially due to what we saw at the gold market. Remember, gold spiked, and a lot of times South Africa can travel in the same direction as gold, since a lot of the world's preeminent gold mining companies are in South Africa. But anyway, South Africa did have the biggest move today. It was up 6.7%. But in terms of importance, I would have to say that China's 4.2% move to the upside was actually a more important action that took place right there. So that's a positive development. You know, we're starting to see these foreign charts stabilize to a greater degree, and we really hadn't seen that for quite some time. And I think that if you want this market to be in a bullish market environment, you want those foreign stocks to be participating as well. Let's go ahead and take a peek now what's going on with the U.S. sectors. And you can see here, it's a little bit more of a mixed bag. The good news is we're back to a bullish posture on the S&P 500 itself. And so likewise, we have a bullish posture on XLF, which is the financials, XLC, which is the communication stocks, and XLK, which is technology. Now on the bottom rung, where we kind of house a lot of our more defensive areas, we have healthcare, staples, and real estate, all with bullish postures as well. In the middle, we still have bearish postures across the board, and we've got discretionary industrials, materials, and energy, and we also can add utilities to that. But the good news is most of those sectors were up today. In fact, the only one that I see on the board right now, and I believe that is the case, is right here. Utilities were down 0.45% today. Otherwise, all the rest of the sectors were up. And again, that's a great sign. We want to see wide participation when the markets are up like they were here today. So that leads us now to our trade application example here for the day. And for that, I want to come back on over here to chart 4A right there. And that will just be a one grid for the market forecast setup with the background colors. And I'm going to type in EWZ. You guys have been hearing me talk about this one for several weeks at this point. I was a little bit hesitant placing a bullish trade on it in the past, admittedly, because we've had a bearish posture in the stock market. But now that we've flipped to a bullish posture, I figure let's take a peek. Let's see if is Brazil maintaining their strength at the same time U.S. markets are snapping back. Because one school of thought would have been, well, geez, if Brazil was doing very well when the United States was falling out of bed, what would happen when the United States comes back to the playing table with a strong 3-day rally like we've had here? Would Brazilian stocks then sell off? And what we've learned is that's not the case. We've had 2 out of 3 up days on Brazil here, at least if you're looking at EWZ. Now, you will recall that a few weeks ago, we did take advantage of the Brazilian theme, but it was just a different thought process. At that time, I was looking at ERJ with you guys, and that stock has really taken off. So that bullish trade has played out. Fortunately, obviously, there's going to be plenty of trades that don't work, some of them that do. This one has really been robust, let's put it that way. It's bounced nicely off that moving average and has not looked back. It's just taken off like a rocket ship. And that helps support EWZ. Remember, ERJ is the leading jet manufacturer of Brazil. So it's an important industrial company within that overall Brazilian stock market. And so that helps what we're seeing right here. But as you can see, we continue to have a bullish posture. So that's not really new. It's just the important piece of information to me is that they retained their strength when the rest of the stock market started to bounce. And that's a good sign. It's a promising sign that that wasn't some sort of a fluke rally based solely on what was happening from a politics perspective, because that's what really ignited this rally was the elections over in Brazil. But the good news is they've continued to go up. Whether the U.S. markets were going down or up in the last month, Brazil has been kind of the stalwart here. So what I thought we would do is look at a bull put spread on EWZ, the ETF that tracks Brazilian stocks. So let's go over here to the trade tab. You can see I actually have it pulled up down below here. What I've got pulled up is the December contracts. So I'm looking at the December monthly contracts here with 50 days until expiration. And what I've done is I've sold the 38 put. And the reason that I selected that is oftentimes we'll look at the delta close to 30. And so this is a delta of 29 right here. So I've sold the 38 put, and I've added to that sold put a bought 36 put. So you can see that's loaded up down below here. In this case, -1 means I've sold one of the 38 puts. This +1 means I've bought one of the 36 puts. Now notice the structure of those two things creates a credit spread where I'm receiving 48 cents worth of credit. Now, typically what we're shooting for is a 30% return on risk. And so the other thing that I want to do is get the calculator out here and just make sure that the 48 cents will get us by. So if I click on confirm and send, what I'll do then with my calculator is just take 48 bucks, which is our max profit with just one contract, and divide it by 152. And you'll notice that's 31.5% return on risk. So that's a pretty good return for 50 days worth of work here. But of course, you only want to place a trade like this if you believe EWZ continues to be bullish going forward. If for some reason you think this is a fluke and politics will play out and they'll go back to falling based off of corporate profit troubles and stumbles, then you won't want to take this trade. But if you believe that this is a stock that, or in this case an ETF, that will continue to track higher, then of course bullish trades might make some sense there. So by selling the 38 and buying the 36, we're basically putting our break-even line right at around where the moving average is right now, because remember, we're taking in 48 cents when we place this trade. So it basically puts our break even exactly at that rising moving average. So if you believe that this is a trend that's in its infancy and will continue for the next 50 days and will continue to trade above a rising moving average, then in other words, you're basically saying that this is a trade that should pan out. So let's go ahead and place that as our example trade here in Paper Money today. I'm going to click confirm and send. Review that information one last time and send that off and see if we can get filled tomorrow. All right, well, and thank you for joining me here tonight. Good to see November starting off on a positive note for the bulls. It's been a while since we've had a 3-day rally here, so hopefully it's a sign of things to come. But remember, stay cool, calm, and collected. We do have Apple down after hours tonight, so it's entirely possible we continue through a few more days or even a few more weeks worth of volatility. So we'll just have to see where things take us. But what we have learned is that there are a few key areas of the market that are strong, Brazil being one of them, and that's where we concentrated our efforts here tonight. So with that, I want to thank you for joining me, and I wish you all the best with your trades and your investments. Goodbye for now.